Okay, and then in terms of levels, so I mean, we're 118 at the moment. That's a strong area. Plenty of offers above 118.50 by the looks of things.
Yeah.
You're going to be buying into yen. Well, how far back do you think this has come? Because I mean, we've had a huge upshoot, right? So usually, markets like to replenish those spaces on the charts. Where do you think this could come back down to? And remember, we are in an era of strong dollar, fundamentally, right? Because there's a huge shortage on the offshore market of dollars, right? So, and we're in an environment where interest rates are going up and yields are going through the roof. So, where do you think realistically the yen could get to?
Well, okay, so right now people are still buying yen pairs, right? They still want to make money. They want to make money all the way to the end of the year. They want to take profit, really ideally in January. So these psychological levels are reachable, all right? And the only thing the technicals will tell you is that, they finally are chickening out. Whether that means in December they need to cash out before a drop, or it's in January. Okay, but it is coming because they want to take profit. So a big psychological level is a great catalyst for that to happen, because people can just say, I'm out, right? And especially if you're like a hedge fund trader or a banker somewhere, and you have a goal for the year. If you hit your goal so that you get your full bonus, you don't want to screw your bonus up, right? So if you've hit your target and your goals, right, you want to stop.
Yeah.
Because you don't want to mess that up, right? So whenever all these things happen, but we're talking about human nature now. We're not really talking about supply and demand of currencies on the short run, as far as when this is all. It's just human nature. So if they freak out in December, my charts will tell me. If they can hang on till January, then I'm going to expect the yen strength, and when I see it, I'm going to buy yen. But here's the thing, and you bring up a good point. Dollar's probably still going to be strong because the fundamentals haven't changed. So it all begins with profit taking. So if I'm long USD yen right now, I'm going to take profit when the market does its pullback, right? The first lower low, I'm out, right? And then if you want to speculate now, because the whole thing is profit taking, that's what happens, especially the big institutional investors. So when we see that coming, great. But we're also speculative traders, right? We want to make money today, income, not just wealth. So on the way down, let's say through January, as I'm selling yen pairs, I probably won't sell USD yen. USD yen will probably come down, but it's higher risk and lower reward. But I'd probably be happy to sell pound yen, euro yen without any problems, right? And if we're worried about Australia, that's going to happen next. And then Kiwi, you got to worry about Kiwi because of the higher yield differential. So, you got to pick and choose, find out what's weak at that point and sell. I mean, maybe it's Turkish lira yen. I don't know, but I'll be buying lots of yen against anything weak.